Brian, I came across a Toronto newspaper recently, and one of the headlines was, "What can I do now to lower my taxes next year?" Now, I have no idea what Canadian taxes are like and how they work, but it did make me wonder, is there anything we could do now in August that might lower our taxes next year?
Well, it depends who you are and what you've got going on, but usually, yeah. But you need a tax plan. I mean, you have to go through and not actually go to a typical CPA. I hate to say it that way because a CPA isn't going to ask all the information.
Well, you hate to say what that way? A typical CPA or just a CPA?
Yeah, no, I'm just saying a typical CPA firm isn't going to ask the questions that may, be able to give you the advice to reduce your taxes because they're going to look at just your taxable income, right? Mm-hmm. Oh, well, you should put more money in a 401k or you should put money in a traditional IRA, which helps you save taxes now. But a lot of times we're talking about saving taxes down the road. So you've got to ask a lot of hard questions, a lot more than because I've had CPAs before we started our own tax business, and they didn't ask enough questions because their goal is to file your taxes, right? That's most firms, CPA firms are pretty tax heavy. That means their main income is doing
taxes, yeah.
Right. So they're not doing tax planning. It's another service, just like auditing is, or doing financial statements or payroll, right? Or whatever. They have all these different services that they can provide, and some of them specialize in one. Like there's companies we know that pretty much are doing financial statements. They don't like doing taxes. They just do all the books for corporations, or they do auditing only, right? So you've got to find someone that is going to ask quite a few questions to find out how, if you have a business, it's a lot easier. If you don't have a business, then yeah, you still got to ask some questions about benefits at work if you're still working. Well, what do you have in assets? Are you charitably giving? I mean, we just had a client come in and go, yeah, I don't think there's anything we do to save on taxes. I'm like, well, you said, how much do you give away to church and all the, well, I give $4,000 away. I'm like, we could save you taxes on that. I mean, this appreciated stock that you bought for $10 a share that's now sitting at 80. Good job. I mean, it took 15 years to get there, but the idea is that it was a good purchase. Gift it away. Gift it to the church. You don't have to pay the tax on the gain. You're so afraid to get rid of this thing. It hasn't done anything in 2 years. It did well for a while.
That's a hard thing to do, though. I mean, when you've worked that long to make it that profitable, and then to give it away.
But you're giving it away. So he was going to get $4,000 anyways from his checking account.
Yeah, there you
go. So now he has a $70 step up in basis. So if he wants to go and buy it back, he could, but his cost basis is now 80, not 10.
Yeah.
And so when he goes to sell it next year, say it goes to 90, he's only paying $10 per share. So it's a little confusing, but when you think about it, you're going to save money in the taxes by creatively thinking, right? Most folks that have assets shouldn't be really giving money from their checkbook. They should be doing it a different way, right? There's trust, there's, charitable gift planning is what we call it, right? If you're over 72, qualified charitable distribution. A lot of folks don't even know about that. Like, how does that work again? You talked about it on the radio. I don't remember. Say, well, you're over 72. You need to take your required minimum distribution or your RMD. We just went through your overall plan, and we noticed that you don't need the income from that. You got your pension. Good job. You worked at the government for 30 years. You have Social Security. Your wife has Social Security. She's still working part-time at church, right? Making $20,000 a year. Okay, well, great. That's good. What are we going to do about taking the distribution? You got $2 million in this IRA. Now you got to take $80,000 a year, and you don't need it. So let's send $25,000 to the government for what? Because you didn't do any planning.
Well, I guess that's how you view it. Don't look at it as a sacrifice. Look at it as, an asset, a help.
Right. So it's like, okay, so should we give the $6,000 to church that we normally are going to give from our checking account where we get no tax deduction?
Yeah, right.
Or should we do it from the IRA and it's tax-free? So yes, there's simple little tiny things that maybe it's only $2,000 or $3,000. Maybe it's, business owners, we've shown plans that save them $100,000 or more a year. Some of them we've got a client right now that we're proposing his elimination of $1.2 $3 million in taxes. If he sold his stock in his company, that's how much he'd pay in tax. So we're showing a way to eliminate that.
Yeah.
And get more income in retirement. So yes, there's a lot of things you can do. Without knowing the information, I can't go through the list of here's the 100 tax strategies.
Well, right. Yeah. No, I get it.
I mean, 80 of them might not even apply to the person that is listening, right? It's one of those you can't. It's not a cookie cutter thing. You got to create a customized plan for someone.
Yeah, everybody's different.
Yeah, exactly.
But